Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. It's definitely time for an update on the situation that currently we are having on Euro AUD, because the market just completed the pattern exactly as we wanted to see from our previous analysis. So it's time to perform a new full breakdown to understand exactly where is the next opportunity to obviously be capitalizing on this pair. Now, as usual, I will keep the analysis very educational so that you will learn exactly what you have to be looking for when you're actually analyzing the market and scanning for opportunities. So without further ado, what I will perform is a full breakdown from a technical perspective. We will then go and see what hedge funds are currently doing both on the euro and on the AUD, obviously with the commitment of traders, which is what hedge funds are currently doing in the market, which obviously if you are able to read the order flow, you can also gain an advantage over your competition in the market. And then by the end of the video, you will know exactly what kind of opportunity we can be looking for on Euro AUD. Now, starting from the monthly time frame, what do we see? Now, from a monthly perspective, we can see one very important thing. We can see that the market had reached a very strong monthly demand area. In fact, before creating this huge impulse to the upside, the market, the last time that they went to the downside was exactly here with this red candle. So inside of this zone, there was very strong demand, which made the market create all this move to the upside. So once the market again approaches this area and also create a deceleration, what you expect is the market to create a rejection higher, basically respecting this demand, which is exactly what we're currently seeing as the market is rejecting quite aggressively this strong demand area. Going down on the weekly time frame, what do we see? Now, from a weekly perspective, we can immediately identify a very important thing that we had already identified also in our previous analysis. We can identify that we had quite strong support here from a weekly perspective, which was the bottom of the range. In fact, this zone was acting as support here, support here, support here, and again support here with this last touch. But at the same time, we also had a quite strong resistance area, which was all this zone here. In fact, this area here was previous support, which after the market broke it to the downside, was obviously turned resistance. And it did act as resistance as we expect. It acted as resistance here, again acted as resistance here, again here, and currently what we're seeing is that the market finally is breaking above this resistance. So basically breaking away from the range that it had created here, because clearly this was a range bound market, but it seems like the market is currently breaking above it with this green candle that has just closed. Now, speaking about the candle that has just closed, so last week's candle, we can see that it is a candle that is green with a quite long wick. Now, when you see the market create a candle like this from a weekly perspective, what you expect is the next weekly candle to actually fill in this wick. Is definitely a pattern that you expect. So when you see a candle like this with a green body and a wick which is at least long as the body, or even better if it is more long, what you expect is the next candle to fill in the wick. And the reason for this is that this wick on the lower time frames, for example on the daily, will simply be a retracement. So when you have this kind of pattern on the weekly, what you actually expect when you go down on the daily is to see an impulse and a correction. And the correction is the wick itself. So then what you expect is the continuation higher. So from a weekly perspective, situation is quite clear. The market has broken above the range, and we can expect continuation higher to fill in this wick. Going down on the daily, what do we see? Now on the daily, we see exactly what we expected. In fact, on the daily, we consider the market has created the impulse and the correction. And the correction is the wick that we have just spoken about. And after an impulse and a correction, what you expect is the continuation higher for the creation of a higher high. Now, what we can also see is that after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And what we can see is that currently we are in between the 50% and 0.618 of the Fibonacci taken on the impulse. So definitely a strong support area. Why support? Because all this area here, as we said earlier, was resistance. However, now that the market has broken it to the upside, is obviously turned support. So what we have at the moment from a monthly, weekly, and daily perspective, if we look at the technical side of the market, is a market that is currently bullish, which is inside of a confluence of support area, which is given by the zone in between the 50% and 0.618, which is also the previous resistance. In fact, we can see here that it was previous resistance, which is now turned support. So both from a structure and Fibonacci perspective. Now, speaking about patterns, if you remember, we actually did perform a quite few breakdowns before this one on Euro AUD. In fact, we spoke about Euro AUD after the market had created this W formation. And after this W formation, when the market was here, I created a full breakdown explaining all the reasons for which from here, we wanted to see first a move lower to complete the pattern at the neckline. And that is exactly what the market did. And then from here, we wanted to see the continuation higher for the creation of a higher high. And again, that is exactly what the market did. And then I spoke about Euro AUD again after the market had created this overextended W formation. And when the market was here, I made another breakdown explaining all the reasons for which, when the market was here, we wanted to see the market create this move lower to complete the pattern exactly where the market is now. So the market has completed our patterns exactly as we wanted to see. And I will link all this previous analysis in the description so you can go and check it out for further reference and more free education. You find everything linked below. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, where is the next opportunity? Now, as I have just explained on the monthly, weekly, and daily, what we would like to see is from here the continuation higher for the creation of a higher high. But before I show you how we will be approaching this kind of situation with students, let's first go and give a quick check at what we have both from a Euro and an AUD perspective if we look up the COT data, which is obviously what hedge funds are currently doing in the market. Now, what we can see if we look at the Euro is that in the long term, we have seen a massive increase of the net positions. In fact, we went from having minus 114K net positions, so way more shorts than longs, all the way up to having a massive amount of net positions, 165K. So definitely a complete shift from having more shorts than longs with 271K shorts and 157K longs to a situation where currently we have the completely opposite, 229K longs and only 63K shorts. So Euro is quite strong, so definitely the move to the upside is possible. And if we go and see what we have from an AUD perspective, we can see that on the AUD, we don't really have the weakness that we would like to see. In fact, we can see that we didn't have any proper shorts getting added. We actually had 5.6K shorts getting closed. We did have some shorting in the past. We can see 9.4K shorts getting added with the previous report. But with the new report, we don't see proper shorts, which is not good. Why? Because if we want to see this move to the upside, we need to see proper shorts on the AUD. So we need to clearly see that hedge funds are shorting the AUD so that Euro AUD can make the move to the upside. Now, how we will be approaching this kind of situation, a situation in which from a technical perspective, it is quite clear that we want to see the move to the upside. But if we look at the COT, we don't really see the confirmations that we would like to see. Now, as usual, trading is reactive. Trading is not predictive. And the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes when it comes to the direction of the market. But when it comes to confirmations and entries and understanding what hedge funds are currently doing in the market, the best time frame is the 4 hours. And at the moment on the 4 hours, what we can see? On the 4 hours, we can see that clearly the market has been creating lower lows and lower highs without showing any sign of bullishness. We clearly have a bearish market from a 4-hour perspective. So it is quite clear why hedge funds still haven't added their shorts, because we would clearly see it here reflected with some bullish price action. So the way in which we will be approaching this with students is as usual, reactive and not predictive. In fact, what we will be doing is monitoring price action inside of this area from a 4-hour perspective, waiting for the market to shift from a bearish market as it is right now to a bullish market, and only if the market will shift from a bearish market to a bullish market, only at that point we will add Euro AUD to our watch list, and as soon as the market will provide to us one of our valid entries with students, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.